Hello everyone, I'm Joseph Yeow, CFA from CMC Markets. Welcome to Trend Tracker. Today, I would like to share some interesting insights into the Nasdaq index and some movements within S&P 500 insider trading activities. Please remember, what I'm about to discuss is for education purposes and not trading advice. Let's dive in. US stock futures are looking positive as we consider the latest data on October's inflation. This softer than expected reading has implications for Federal Reserve interest rate policies, where it supports the case for potential rate cuts in the future. Now, on to Nasdaq chart. It's been on a good run for the past 2 weeks, reaching around 16,000, its highest level since the COVID pandemic. From a technical standpoint, things look a bit more bullish as it's broken out of a descending channel. Together with the tailwind of soft landing, if it manages to break the 1-year high around 16,000, the next resistance level is at approximately 16,550. Next, let's talk about insider transaction within the S&P 500. Insiders refer to institutions or individuals who own more than 10% of a company's share. This table shows the top 10 activities over the last 10 days. We use this information as a sort of screening system to gauge market activities. Looking at the table, most of them have insider selling shares, but it's important to note that this doesn't necessarily indicate a bearish outlook. It often signifies a neutral stand as insiders take profit. Buy signals are usually more correlated with the bull runs. However, there are only two instruments where insiders are buying, which are Mastercard and Exxon Mobil. I will go through two counters. Let's start with Salesforce. The company revenue has been on a steady rise, even after the pandemic, because of Salesforce AI capabilities, which help companies analyze client data more efficiently. Earnings are expected at the end of the month. It's worth mentioning that Salesforce has been beating expectation in its last 4 announcements, which is pretty good, and there's no indications of revenue slowing down yet. However, even with the positive revenue outlook, the stock has been moving within a descending channel. It will only be considered a new bullish trend if it breaks above the 230 mark. In that case, the next resistance level to watch for are around 257 and 307. Now, let's take a look at Exxon Mobil. It's interesting because this is one of the few shares where insiders are buying shares. Director Jeffrey Urban recently bought around 26.5 million worth of shares this month. This signals confidence from senior management. From a technical perspective, the stock is currently hovering around the psychological support level of $100, and the RSI indicator is close to oversold of 30. Overall, the sentiments from senior management and technical analysis leans somewhat bullish. That will be all for today. Remember, these insights are not trading advice. You should conduct further research before making any trading decisions. Stay tuned for more updates in the future. See you next time.